Hey, my name's James Nicholson and welcome to my YouTube video. In this video, we're going to talk about interest rates. I've got interest rates on buy-to-let properties in your personal name, your own name. I've talked about HMOs in this. I've talked about residential mortgage for those of you that have got big deposits or lots of equity, and those of you that have got small equity. Now, this week, there are a lot of changes, and unfortunately, some are down, rates are down on some small amounts of these deals in the market, but the majority of them are up. Now, the reason for that is because of the uncertainty in the budget. The budget is expected next Wednesday, or is next Wednesday, and there is some uncertainty in there. The markets don't like it. They're not really keen on the capital gains tax that might happen and anything else that squeezes the economy and stops growth. And so because of that, mortgage rates, or the swap rate, the rate that these banks get to borrow money at, that's increased over the last week or so. And off the back of that, you have seen rates go up. Now, before we go into the rates, what I do recommend is if you have a deal that's coming up in the next few months, then fix a rate now. Go to a broker, go to that lender that you're already with, fix a rate today, and then at least you know your worst case scenario. So let's just say the budget happens and it's terrible and the markets hate it, interest rates skyrocket. At least you know your worst case scenario. But let's just say the budget is not as expected and it's really not quite as bad as some of the rumours have been. And then interest rates are likely to drop and you can swap on to that better rate as long as you haven't started that new deal. So let's just say you've got a deal that ends in February. You can agree the rate in principle today, and that fixing your worst case scenario. But if a better rate comes, you can swap that out. But if rates get worse, you've got that agreement in principle, and that's what's good. Now, I am going to be talking tomorrow about rates potentially dropping a lot as well, but that's going to be at the end of next year. So do take that in mind as well when considering what mortgage you're looking for. And at the end of the day, you should speak to a broker and get them to look at your financial situation and see what works best for you. So let's jump into this. But before we do, if you haven't done already, do subscribe to the channel down there and hit that bell notification. We're on the way to 32,000 subscribers now, which is crazy. And while you're here, smash like, tickle like. That really helps with the YouTube algorithm and it helps the channel grow significantly. So thanks to everyone that does that. And this video, I don't ask this in all the videos, but share it. Hit that share button. I'm sure you know somebody that's looking to remortgage. Maybe your auntie, your uncle, your mum, your dad, your brother or sister. I'm sure you know someone that's looking for the best rate at the moment, and this could definitely help them. So first, we're going to look at HMO mortgages. Now, an HMO stands for House of Multiple Occupancy. It's where, as an investor, you have a larger property and you rent it out on a room-by-room basis, like student accommodation. That might, if you don't really know what this is, it's like student accommodation. And so the rates on that, we found the best rates at the moment are with the Mortgage Works. These are pretty much the same as last time. The 5-year deal with them is 5.49%. The fees are quite hefty at 3%, and they'll lend you 75% of the value of the property. So not a bad deal there. 2-year deal is 4.94%. And that is also having a 3% fee and 75% loan to value. Now, HMO mortgages are always more expensive because they know you make more money and there's not lots of lenders that do it. So you'll always see these a little bit more expensive than maybe some other ones. Next, let's look at a mortgage in a limited company name for a buy-to-let property. So on this channel, we talk about investing in property. And if you're going to invest going forward and you're going to do a new deal, my recommendation is that you invest in a limited company. That's how the government really want you to do it now, and all of the benefits are really only there for limited companies. So you can write off your phone bill, your mileage, you can write off costs in that business, which you can't do in your personal name. So Mortgage Works, again, is one of the best lenders for this. Their 5-year deal is at 4.99%. The fees are 3% on this, and it's a 75% loan to value. The 2-year deal is 4.79%, 3% in fees, and 75% loan to value. So not bad deals there. And that, if you're thinking you want to get a new deal or buy a new property, I would recommend that you do that. That's the best way for that. Now, buy to let in your personal name. This is how most of the buy to let market is in your personal name, because the rules were fine for buy-to-lets in your personal name for decades. And so there are millions of properties in people's personal name. And Mortgage Works, again, is the best. Now, interestingly, there's some differences here which I want to talk about, which you need to keep an eye on. So their 5-year deal is 3.74%. Interesting here, they've changed now from having, rather than having a 3% percentage fee, they've now gone for a fixed monetary price. This is probably better for you if you have a property that's over 100 grand, right? So if it's over 100 grand, or the lending you need is over 100 grand, this is probably a better scenario for you. So 2,250 on the 5-year deal, 75% loan to value, meaning you've got to have 25% equity or a 25% deposit. The 2-year deal is still really cheap. I've been talking about rates going crazy and going up. A lot of banks did put their rates up 0.25%, but the Mortgage Works have kept this deal, which is the best deal in the market at the moment for 2-year buy-to-let deal, 3.49%. And this has a £1,500 fee. That's changed this week from a percentage fee as well. That's way better than the 3% fee, in my opinion, and that's a cracking deal. Imagine if you borrow 500 grand, it's not that expensive. It is quite affordable, I think, and you can get deals to stack up at that kind of rate. So that's an option for people as well. Next is residential mortgages. Interestingly, Nationwide, they have the best deals here if you've got at least a 25% deposit. And interestingly, Nationwide is the Mortgage Works. They are the same company. So they're still being aggressive and trying to get that market share, which is interesting. Now, they have a 5-year deal on a residential property under 4% still at 3.89%. That has 999 in fees, 75% loan to value, or you've got to have 25% equity or more. The 2-year deal is at 4.414. That should say increase. That has gone up. That was under 4%. 999 in fees, 75% loan to value as well. So they're not bad, these rates still. While rates have been going up, Nationwide are still being quite aggressive in the market, which is good. Next, these are not buy-to-let. These are residential mortgages if you've got a small deposit, 10% or 10% equity. So you can do this on a remortgage or you can do it on a new purchase. So a 5-year deal with them is 4.49%. That also, my mistake on that should say increase. Both of these deals have increased. 4.49%, 999 in fees, 90% loan to value. And the 2-year deal is 4.89% with Furness Building Society, which is a new lender that we haven't spoken about. They're trying to get some market share, so they've gone quite aggressive with their rates. 999 in fees on this one. So look, there's a lot going on in the market at the moment. So while the budget, we're waiting for two things really. We've got the budget next Wednesday. That's got some volatility in the market. We have the US election as well, which has also got some volatility in the market. And potentially Trump could win that election. If Trump wins, then inflation in America could come back because his goal is to put tariffs on everything that's imported. A lot of economists think that's going to bring inflation for America roaring back. But he also is saying that he wants to have more input on the Federal Reserve and push rates down. So you could see the Fed pushed quite aggressively to drop interest rates over there, which means we would probably do the same. So Trump's a wild card. The budget in Labour is a wild card as well. So the markets, I think, will settle down. The swap rate that these banks borrow at will settle down after the budget and after the US election. So right now, if you're doing a deal in the next few weeks, it could be volatile, but it also could be smart to fix a rate, because let's just say everything goes and the markets don't agree with what happens after the budget, after the election. You could see rates going up again temporarily. Longer term, the outlook is looking like rates are going to drop quite a bit next year, and so these rates will start to come down with that as well. So always speak to a broker when you're looking for a deal for yourself. Let me know your thoughts, questions and opinions in the comments below. Is there any other lenders we should be checking? Have you seen any cracking deals on residential stuff or buy-to-lets? Always helpful when you guys do point those out, because look, there are thousands of deals out there with thousands of lenders, and so it's difficult to see everything. Anyway, that's it from me. Do like this video. Do subscribe if you didn't do already. Do check out all the other content on my channel, including this video right here.